Bitcoin used to be a decentralized network where people could hold it sovereignly and you could have it without counterparty risk. And then the next line was, still is, but a bunch of billionaires have figured out that they should be buying as much as they possibly can of it. If Saylor woke up tomorrow morning and was like, you know what, we need 22 million Bitcoin for whatever really important reason, that's just not going to work. Bitcoin is still bigger than governments, corporations, ETFs. It's outside the control of any major institution. I think the next bull market has really, really high potential for Bitcoin. Thinking back to like the success of Stretch, and this is tapping into like a completely new capital pool. This is the first time in like Strategy's history that they've actually had a pretty meaningful accelerating bid on Bitcoin, even while Bitcoin has fallen 50%. This is kind of like a bear market bid that has been put in on Bitcoin. Bull markets that we've seen in Bitcoin have been great, but there's probably a lot more fireworks left, and arguably in the grand scheme of things, this thing could be just getting started.
Hey everybody, Tyler Rowe here with BitcoinTreasuries.net, and today I'm joined by Joe Burnett, the VP of Bitcoin Strategy at Strive and host of the Mustard Seed podcast, and one of the clearest thinkers in the Bitcoin Treasury space. Joe, welcome to the show.
Hey Tyler, thanks for having me.
You got it, man. So let's lead off with, you're at Strive now, probably looking back a year and a half, if you told yourself what you'd be doing today, I don't know if you'd believe it or not, but, you're working with Matt Cole, you're working with Jeff Walton, Ben over there, shout out Ethan Peck, and it sounds like a really fun crew you guys have there working on Bitcoin strategy at Strive, one of the, I would say, pure play Bitcoin treasury companies. What's the culture like at Strive, and how are you guys figuring all this out in real time?
Yeah, it's a great question. I mean, thinking back over the last year, it's been crazy because I think I joined similar like June of last year. So at this point, I was still working for Unchained, like a Bitcoin custody and loan company. And like obviously, I'd been following the strategy story closely since 2020. But it's crazy how fast things move in the Bitcoin space. I mean, Strive is an incredible team, right? I think if you like right now, as we're speaking, our market cap is over $1 billion. Yet Strive, the company, excluding the similar scientific healthcare company, has like 30 employees, maybe like one or two less, which is like pretty incredible for a company that is worth $1 billion. It's crazy to think about. But as far as like the team and the culture, everyone is very diligent and hardworking, and fully believes in the thesis behind Bitcoin and wants to see Bitcoin continue to emerge as this sovereign, perfectly scarce, new bearer monetary asset. And everyone also, I think that this is common, I guess, in some Bitcoin companies, but maybe not necessarily others. Everyone, I think, has a very low time preference and a very long time horizon. And I think that's literally required to operate a successful Bitcoin treasury company. I think like we've seen countless smaller Bitcoin treasury companies sell coins or kind of pivot their strategy. We've seen a lot of Bitcoin miners pivot to AI and building data centers for AI and so on and so forth. So there's been a lot of pivots, and Bitcoin being this incredibly volatile asset, yes, obviously historically it's come with this like very high CAGR, but that historically high CAGR comes with an extreme volatility. And so if you are doing things in the Bitcoin space, but you lose conviction at the worst possible time when the volatility is high and the price may be quote unquote low, that's kind of how you can get into the Bitcoin space and end up not doing very well and not performing. So you have to have that very long time horizon, and you have to have that diligent work ethic and focused on accumulating Bitcoin and increasing Bitcoin per share over time and communicating that message to the market and to your investors. I think everyone at Strive, the few people that we have at Strive, are very focused on doing all of those things. And I think it makes for an excellent company culture.
Yeah, that's really cool. I think you guys have a really solid team, and I'm fans of a lot of you guys and what you're doing. It's been interesting watching different treasury companies take some different strategies. Like you said, some have kind of sold coins in moments of kind of operational panic or pivots, from miners to the AI sector. And I was talking with a treasury executive today who they operate their Bitcoin treasury a little bit more like a hedge fund, and they're willing to sell some Bitcoin, if their NAV is trading below 1. How do you think about the concept of a Bitcoin treasury company selling their Bitcoin? That's something we haven't seen a lot of. Michael Saylor always says, never sell your Bitcoin. And it looks like you guys seemed positioned to not do that type of thing. What are your thoughts on, the financial engineering aspect of selling your Bitcoin or buying back shares when you're trading at a discount?
Yeah. I think we've like looked into that idea of selling Bitcoin and buying back shares, at a discount to the NAV. I believe that there's like rules around turning off and turning on your ATM in ways that like you have to pause. Like if you do buy back shares, you then cannot issue shares for the next 30 days. So that adds another layer of additional complexity. And as we've seen, like the price of Bitcoin is incredibly volatile. So, 1 week you can be, wow, like, the market's down, no one's buying Bitcoin here. And then the next week the market's up and everyone wants to buy treasury companies again. So it's a very volatile market. I think that makes it very hard if you were to create that like 30-day delay where you can't be in the market for, whatever reason. And I think like at least thinking about like Strive and just broadly the Bitcoin strategy, it's like the goal is to increase Bitcoin per share over time and continue to grow the balance sheet over time. And to do that, it's a lot easier to just buy Bitcoin and not even think about selling Bitcoin, right? I think there's also like, as we've seen with other like the smaller Bitcoin treasury companies, there's kind of like weird market dynamics around selling Bitcoin. Like you, at certain points, like yes, maybe you could make the case that it would be better on a short-term Bitcoin per share basis to do so, to sell Bitcoin and buy back shares, but it comes with like weird market stigma, and there's like longer term effects of that. Like so you think about like what Strive and Strategy have done over the last 12 months. We've actually been like bolstering the balance sheet to build a cash reserve, or in our case even a digital credit reserve, to make the balance sheet more robust and resilient, to show to credit investors that like SATA is lower risk than it otherwise would have been without a cash reserve or without a digital credit on the balance sheet. So I think like from a credit investor perspective, you also don't want to be like decreasing the balance sheet at all. Like that's actually a really bad idea. So really, if we're prioritizing and focusing on SATA, which is for our credit investors, then for them, it's better if we continue to grow the balance sheet, even if it's in the short term not accretive in terms of Bitcoin per share, right? Like if you raise cash and hold and build a cash reserve, that's obviously less Bitcoin than you otherwise would have had if you raised cash and acquired Bitcoin. However, it's possibly going to be more accretive on a long-term basis for Bitcoin per share, because you can build confidence in your digital credit product, and therefore additional, in the future, possibly raise additional money via the credit product and then use that to acquire more Bitcoin over time. So yeah, there's like, I think it's interesting, and it's interesting to get creative on like various like financial engineering ideas. But I think at the end of the day, the best thing to do is focus on Bitcoin per share, focus on the credit profile of your digital credit product, and then kind of communicate that to the market in a very clear and simple manner, and kind of let Bitcoin, do its thing over time.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a Cold Card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, that makes a lot of sense, especially with the framing of leading with your credit product in SATA. I think some of those transactions could get really expensive really quickly with different filings that are required there. So speaking of SATA, obviously you guys were the second to the market with a monthly paying, dividend paying digital credit offering with SATA. I think it's trading or paying 13% annualized right now. And recent news with Strategy's flagship preferred equity is that they're hoping, pending shareholder approval, to move to semi-monthly dividend payments to kind of cut out some of the arbitrage that was happening for people, bidding up Stretch right before the ex-dividend date. And I saw Matt Cole kind of tease, that you guys would at least be open to the idea of that. So, we'll be definitely paying attention to news there at some point. I was talking with one of the guys from Apex, and they've got a stable coin savings coin that kind of securitizes. I don't know if securitizes is the right word, but it is kind of backed by preferred equities like SATA, like Stretch, and I'm sure more in the future as more companies add these products. And he said he'd love a world, where they're selling their product, where there's different preferred equities that are paying dividends weekly and maybe daily eventually. I can see that being the case as more companies pop up and are able to build out a credit stack. What do you think about, first of all, I guess, Saylor's and Fong's announcement saying that they want to pay dividends twice a month? I guess there's some SEC limitations on doing functionally more than twice a month dividend payments right now. So, how do you think about that whole concept? And how is your team thinking about that broadly?
Yeah, it's a great question. I mean, seeing Saylor's announcement and Fong's announcement when they decided to, push towards going from a monthly dividend to a, bi-monthly dividend, so twice a month, wasn't honestly that surprising to me. I think he's talked about it a number of times where ideally he's paying every second. I think that would be pretty cool. And like you said, like there are limitations, whether it's like an SEC limitation or like a NASDAQ exchange limitation, or just like the way that, these companies like operationally have to distribute the dividends. There are like just natural, outdated the kind of limitations compared to something like, in the Bitcoin world or crypto world broadly, like, you're mentioning these ideas of digital money, like there's these limitations really shouldn't exist. It's kind of just like an outdated technology or an outdated framework that is trying to get ported into like the digital world, where theoretically like this would be something pretty straightforward. Claude code could probably spin it up pretty quickly. So yeah, I think it's a great idea from Strategy. You mentioned Matt has talked about it. I think he did a poll that was something along the lines of, SATA investors, would you prefer to have a bi-monthly dividend or keep it as is? And almost everyone said bi-monthly dividend. And then I believe today he quote tweeted that and said message received. So that's kind of what's been publicly stated out there, and I'll probably leave it as that at that. But I think it's a really good idea. I think what Strive and Strategy are doing is like we've stated that we want these products to trade in a specific price range, and we have different tools in the tool belt to ensure that the products move towards that price range over time. And this is just kind of like another way to make it, more clearly less volatile over time, right? Like when if you look at any sort of like ETF, there's one called BIL, which holds like short-term T-bills. You can see like at the ex-dividend date, every time the value of the ETF per share drops significantly, and then it slowly climbs up over time. And therefore, very logically, if you paid more regularly on the dividends and assume markets were relatively efficient, then that drop after the ex-dividend date would be lower because you're paying it more often, and there would just be less volatility in the product itself, which is kind of what more people want when they're looking at these things. So yeah, I think it's a great idea. We're absolutely thinking about similar things as well.
Cool. Stretch has really held its peg these last couple months, other than you said the drawdown kind of ex-dividend, and we've seen your product SATA as well trade really close to par, and as we're recording today, it's getting awfully close as the ex-dividends also coming up on that. Are you surprised? I'm sure you were hopeful that this would be the case, but are you surprised how quickly these instruments have matured? Your CEO at Strive, Matt Cole, said that seasoning is something that needs to happen with these products. It takes time for investors to kind of pile in. To me, especially in a Bitcoin so-called bear market, and these products have been on the market less than a year, has it surprised you how much interest there's been in them?
Yeah, it's a really interesting question. I mean, I would say yes and no, in the sense of like, okay, I think Bitcoin itself is an incredible product, right? And there's times when I'm like, wow, like how does the rest of the world not see this and just port a large portion of their portfolio into Bitcoin? And some days I feel like it's happening really fast, and then other times I feel like it's happening really slow. Digital credit, I think, is kind of a similar dynamic where it's like this is a really interesting product. If you took the time to like think about it and understand it, you'd probably be pretty interested in it at the current market price with the current yield. If you've done the research and identified the potential risks that can occur, like that might be interesting. However, I've been in Bitcoin for quite some time, and sometimes things take longer than expected. And Matt Cole has made really good points in the past. Working at CalPERS and being an institutional asset manager, like a lot of like large institutions won't touch new financial products for like 3+ years. They need to build that 3+ year track record, and then they can kind of dip their toe in the water and test it out. So it's like not unreasonable that digital credit has not raised trillions of dollars overnight. However, Strategy, whether it was last week or the following week, raising $2+ billion in 1 week entirely from STRC. That's pretty impressive. And it shows that there's a lot of demand for these new products, and arguably rightfully so. I mean, this is kind of Bitcoin fell 50%. These products remained near par. They continue to pay their dividend. In a way, the track record has kind of been building so far. And if that's the case, and Bitcoin can be its normal volatile self, falling 50%, and these products hold up pretty strong, that's a pretty compelling, thing to consider, especially if you're just looking back at the historical Bitcoin price action and you're worried that Bitcoin falls in a short period of time. Will these things hold up? Well, so far they have, which is quite impressive, and that obviously will give people confidence that they're going to be around for a very, very long time. So yeah, I mean, I think that partly surprised with how fast it's going, partly not surprised, because I think at the end of the day, like this is kind of going to turn the financial system upside down in a way, and it's a really big deal. And kind of just like Bitcoin, like once you see it, you can't unsee it. It's kind of hard to go back. And I think the world will probably change for the better as time goes on here.
Yeah, I think I've definitely evolved in my views on it. I wouldn't say digital credit is the product for me, for someone who's kind of like a Bitcoin maximalist, but like it's like, yeah, once you see how the need for these types of products, it's like, yeah, you can't unsee it. As Bitcoin, we're trading around close to 80,000 today, Joe, and Bitcoin's going to hit new all-time highs eventually here, and wow us and shock us and take twists and turns on all along the way. And my speculation is that it will be quite easy for Strive, for other Bitcoin treasury companies to raise capital. Obviously, when Bitcoin's price is really pumping like it was over the past couple of years. How do you strategy Saylor and the team at Strategy kind of followed in your guys' footsteps when they added a cash reserve position to kind of provide some structure underneath STRC, and you guys, I think you added 18 to 24 months of a cash position to cover dividends on SATA. Um, is there a sweet spot for how much cash should underlie and cover these dividends? And what's your framework for like kind of either communicating that and building out that balance sheet that has both a cash reserve and digital credit in addition to the Bitcoin?
Yeah, it's a really good question. I mean, probably part of it is just kind of figuring out what the market wants. Like you said, like Strive, before I joined the team, Strive decided to have their own cash reserve on their balance sheet. And currently we have in the dividend reserve 12 months of actual cash and then also 6 months of digital credit via STRC. So that is, I think that's incredibly important for a Bitcoin treasury company that has digital credit outstanding, because you want to be able to meet your dividend obligations very easily over the next 1.5 years without having to touch Bitcoin, without having to really do anything, and to show the market that, like, and specifically the credit investors, that like, hey, like, we have a lot of actual liquid assets that are stable on the balance sheet, ready to pay you over time. And of course, like, the interesting thing that I think about, both Strive and Strategy is, like, you'll look at the different metrics, like, okay, with the current liquid assets on the balance sheet, Strive, for example, could pay the dividend obligation for 20 years, even assuming if Bitcoin doesn't go up over the next 20 years. You can find the actual exact number on the the Strive dashboard, but like, that's the rough number. And so when you think about that, like, wow, like 20 years, like, that's actually quite a long time. But another thing that I think a lot of people don't recognize is, like, okay, so say we have the 12-month cash reserve and the 6 months worth of digital credit reserve on the balance sheet. And let's say, Bitcoin just goes sideways for the next 12 months. And we currently have 20 years worth of liquid assets on the balance sheet that are, you know, there for potential dividend obligations. Well, like, if Bitcoin just goes sideways for the next year for Strategy or Strive, most likely scenario is, like, the dividends get funded via raising common equity, and then at the end of 12 months from now, we still have 20 years worth of liquid assets and dividend obligations already on the balance sheet, assuming Bitcoin didn't even go up. And so, like, that's, I think once you think about that, then you sort of realize, like, whoa, like, these credit instruments actually could be even more resilient than I previously thought. And I think, like, over time, if the market isn't there for digital credit, then obviously, like, there's different tools that companies can be raise the dividend rate. But another tool is raise more cash and put it in your dividend reserve. And that can help the market understand that, okay, like, this company can pay the dividend for a long time. So I think like, Strive and Strategy's dividend reserve, like, is pretty sufficient for now. But it could increase over time if needed, if the market is kind of telling the company that it needs to be increased. So it's a really good question. There's, like, probably not a perfect specific number for, like, how much cash reserve you should have on the balance sheet in order to meet your dividend obligations. But I think over time, as the market, you know, thinks realizes that these digital credit instruments might be lower risk than previously thought, maybe the cash reserves won't grow at the pace that they grew over the last 12 months, maybe from like zero to something. But time will tell. It's an interesting thought experiment.
it's funny. The market's going to lead on this. So obviously, to me now, we've talked about rating agencies catching up to rating these products or rating Bitcoin treasury companies, and as Bitcoiners, it's obvious to us, like what a great asset to have on your balance sheet. But it's going to be the institutions, it's going to be the investors realizing this is a good product before I think a lot of these rating agencies, just to understand how to properly value the dividend reserves in the Bitcoin on the balance sheet. You were talking about earlier how Strategy raised over $2 billion purely with Stretch recently, and that's crazy. They're sitting at 815,000 Bitcoin on the balance sheet. The march to a million Bitcoin, as Saylor has talked about for a couple of years, is on. And if things stay how they are or accelerate in any way, Q3, Q4 of this year seems pretty obvious that strategy is going to break that million Bitcoin mark. A lot of people ask me who are interested in Bitcoin or following strategies, accumulation. Why is Bitcoin's price sitting where it is? We have had a little bit of an uptick here recently, but what's your take, Joe, on why this persistent bid on Bitcoin from Michael Saylor and the oodles of capital that he's basically transmuting into Bitcoin? Why has the price not ripped up?
It's a great question. A lot of different thoughts here. I mean, one thing that I think is interesting that I definitely agree with, and I've heard this from like a number of people that are like seeing a lot of the flows in the ETFs and seeing like where the coins are coming from and so on and so forth. I think the whole concept of like OGs selling, I definitely think that's been happening. It's from what I've seen, it's like, okay, if iBit adds, that X thousand coins in one day, sometimes there's just a large OG Bitcoiner that like literally was just selling to iBit one day. And I think that's the case. And like, if there's, one of those, there's probably 10 or, maybe even 100 of those, who knows? But I think that that's probably a big part of it as to why, price has kind of done what it's done and hasn't gone where many people would have thought it should have gone. However, I think this is like a one-time thing, right? Like at the end of the day, I think it's better for coins to get more distributed among a variety of different hands. Whether ideally everyone, it's going to individuals, but even like if you look at the ETFs or you look at treasury companies, obviously those are owned by thousands, potentially millions of people if you count like the index funds that buy shares of treasury companies and hold it on behalf of those people. So like in a way, the Bitcoin is just kind of like naturally getting more distributed to more and more hands over time, which I think is good for the world, especially if we're right about Bitcoin and Bitcoin is a better form of money. You kind of want to get more people on the lifeboat before the flood hits. And I think treasury companies and ETFs are like a good first step for like so many different people. As far as like why is the price not higher? I think that's a big part of it. And I think it's also just like kind of a matter of time. Thinking specifically back to like when I first joined Saylor, like pretty involved, like on both sides of like the ATM offering and then also the Bitcoin acquisition. And one thing that I found like kind of interesting is like, okay, we go in an earnings presentation and we explain like, all right, Saylor Scientific is amplified Bitcoin. And then, on the days after that or the days before, we are selling amplified Bitcoin in the market, and then we're buying Bitcoin. It's almost like a delta neutral trade. And I almost kind of think it's the same for like strategy and a number of treasury companies, where just like if you were selling, 1,000 Bitcoin on Kraken and then buying 1,000 Bitcoin on Coinbase, like that's kind of like a neutral trade. It's not really affecting the price. Of course, it's not perfectly the same. There's buyers of treasury companies that wouldn't be buyers of spot Bitcoin or couldn't be buyers of spot Bitcoin, but like they are pretty similar. Like they're pretty correlated, obviously, to say the least. Whereas I think why we're kind of approaching probably a pretty important inflection point is digital credit is very unlike Bitcoin or amplified Bitcoin, right? Like it's a stable instrument. Both Strategy and Strive have stated price guidance that it will trade between 99 and 101. That's very unlike Bitcoin. And it pays a monthly and potentially bi-monthly dividend yield. And so this is like a completely different product that is raising a lot of capital. And I think that that's definitely not a like delta neutral trade. And so I think like with digital credit really like starting to ramp up and starting to accelerate, this could be like that relatively new inflow of demand that may not have ever existed before, and it's going to be buying a lot of coins pretty rapidly, as kind of we've seen with Stretch. And if it starts to accelerate, this could really take off in a really big way. And so I do think that we're probably approaching an inflection point for that. Of course, if markets, if geopolitics ramps up, or the Fed has to hike rates dramatically, or the U.S. government, temporarily pauses spending or shuts down once again, there could be, of course, additional volatility. But I think at the end of the day, the money printer is gonna turn back on. Credit is going to expand all throughout the financial system, including digital credit being a part of that. And I think as digital credit becomes an increasing part of the new credit that gets created around the global financial system, that credit being created is going to be funneling capital into Bitcoin. And Bitcoin is still tiny relative to so many other asset classes out there, that once this really starts to pick up, it could be pretty intense.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market leading rates at every size. You can learn more at archlending.com.
Yeah, really interesting points, and interesting point too about like the distribution of coins. That's like an inevitability, and something I think that's important for Bitcoin. I've also heard you talk about there's this counter narrative from some bears or people who are bearish maybe on strategy, who say that there's concentration risk. But I think you nailed it on the head when you said, a company like Strategy, like Strive, is owned by hundreds, thousands, tens of thousands of people. So, it still is distributed. Maybe if Strategy owned half the market or something like that, it would be a concern, but I don't think we're anywhere near that. I agree with you. When thinking about how people are getting Bitcoin exposure through passive funds, or maybe it's passively through digital credit, and we think those derivative products, built on the back of digital credit, are just going to grow over the coming years. I think we'd agree. Do you think that's like a good thing for Bitcoin? It seems like it's probably a good thing for individual investors to get Bitcoin price exposure, right? But how important, like, is this current adoption curve that we're in, I guess, good for some of the promises that Bitcoin had is, to really change the money and to really, let me phrase it like a little differently. I guess, like historically, Bitcoin has been, kind of this counterculture against the easy money and the out of control spending. Do you think people coming into Bitcoin now will be able to get that?
Yeah, I do. I, it's an interesting question too, just thinking about like the ethos of Bitcoin and the rise of ETFs and treasury companies and so on and so forth. I saw an interesting tweet from someone the other day that was talking about like Bitcoin used to be a decentralized network where people could hold it sovereignly and you could have it without counterparty risk. And then the next line was, it still is, but a bunch of billionaires have figured out that they should be buying as much as they possibly can of it. And I think that's kind of a good way to put it. It's like no one can change, like Strategy and Saylor, like Saylor's, probably the most prominent Bitcoin, spokesman in the world, obviously right now, probably been that way since like the last, I don't know, 5 years. However, like Saylor can't change Bitcoin. I mean, if Saylor woke up tomorrow morning and was like, you know what, we need 22 million Bitcoin for whatever really important reason, that's just not going to work. Like that's the beauty of Bitcoin is like Bitcoin is still bigger than like governments, corporations, ETFs. It's outside the control of any major institution. And I think that's what's like so cool about Bitcoin. And if you think like, okay, well, is it bad that these companies or ETFs are accumulating Bitcoin? It's like, you know, it was inevitable. If Bitcoin is what it is, this was inevitable. Like this was gonna happen one way or another because there's a very clear, in my opinion, monetary incentive to buy as much Bitcoin as you can before the rest of the world kind of catches on. And arguably, I think that's what's been happening for the last 15 plus years at this point. Probably going to keep happening. And then you ask like, will people recognize that Bitcoin is this thing that kind of like is the anti-money printer? I still do. I think there's always like stepping stones to like fully grokking and understanding Bitcoin. I think of Bitcoin, especially during its monetization phase, like right now, it's incredibly volatile, but that comes with an extremely high potential CAGR or future return of just holding the Bitcoin. And, thinking about Bitcoin over the last, since I've been interested in Bitcoin, it's like, okay, you have to have a time horizon of 4+ years. You have to have absurd, relentless conviction in the idea throughout 50, 80% drawdowns. I mean, how many people can actually do that? Like, there's not really that many people in the world that can have that conviction after an 80% drawdown when everyone's saying, like, I can't believe you bought that and never sold it. You're an idiot. Like, very few people are able to have that low time preference and long-term thinking and maintain that conviction. And so, like, it's not that surprising that Bitcoin adoption globally might be like 1% or less than that. Whereas like digital credit, completely different product, still built on Bitcoin, but it's stable. It pays a monthly or future bi-monthly income, and it's the yields currently are 11.5 to 13%. Like everyone wants that. It's not hard to see why that's valuable, and the volatility shouldn't scare you away, even if Bitcoin does drop 50% like it did with these products existing. And so I think like during the monetization phase when Bitcoin is incredibly volatile, maybe people like it's going to be slower. Clearly, it's going to be slower for people to understand why they should hold a bunch of Bitcoin. Maybe digital credit is like a very important stepping stone for them to have like some indirect Bitcoin exposure. They don't have to ride the roller coaster. And then over time, as Bitcoin's CAGR maybe slows down, as Bitcoin's volatility gets a little less intense, then it becomes a lot more clear that, oh, wow, like the US is going to continue issuing money and printing money and issuing credit forever. Bitcoin is this perfectly scarce monetary asset. I didn't get that at first because it went from 20,000 to 3,000, then to 69,000, then to 16,000, then 126,000, then back to 59,000. I didn't get it back then, but now that it's like slowly climbing and beating a lot of my house is going down and priced in Bitcoin. My stocks are actually going down or flat priced in Bitcoin. My car is definitely going down priced in Bitcoin. It's going to start to make a lot more sense possibly when the volatility dies down. So that's kind of how I'm thinking about that.
Yeah, really, really great points, and I think there's not anything to disagree with there. Thinking about the volatility that's been muted over this last cycle, compared to historical cycles, and in long term, we think that volatility will, you know, trend downward. Or at least I do. Gordon Grant always calls Bitcoin a wild child, but we're kind of seeing it mature, right? So there's Wall Street dipping their toe into the water. Do you think those major drawdowns are largely behind us? The 80% drawdowns. Of course, anything's possible, but how do you think about the dampening volatility? Is it just dampening on the downside? Because obviously, I think Bitcoin's going to be sucking monetary premium out of a whole host of assets, from real estate to equities to credit, certainly. How are you thinking about the volatility moving forward?
Great question. I mean, generally, yes, I agree. Like I think the volatility is going to drop. I think like if you can imagine a world where Bitcoin has reached full adoption, which, there's different probably definitions of what full Bitcoin adoption might be. Like that could be a Bitcoin standard, that could be Bitcoin matching digital gold, that could be Bitcoin coexisting with the dollar when it's still a $300 trillion asset. Um, there's a lot of different examples of that. But I would say that whenever Bitcoin does reach full adoption, whatever that might be, that's probably when volatility is going to be low. I tend to think that, multi-hundred trillion dollar Bitcoin is actually within the realm of possibility for sure. If not decades from now, like a full on Bitcoin standard where Bitcoin is the dominant unit of account and, way people think of money. However, I do think that if that's the case and Bitcoin is possibly this multi-hundred trillion dollar asset, well, if you look at Bitcoin today, it's incredibly mispriced compared to a multi-hundred trillion dollar asset. And if that's the case, then markets probably, it could be a power law like grind to the multi-hundred trillion dollar asset, but also it could get very wacky and out of control if a lot of people start to realize what might be happening. And if that's the case, then there's an argument to be made that volatility could expand over certain periods of time. And there could be a very large, massive Bitcoin bull market followed by a crash that was kind of driven by maybe an unsustainable bull market for a certain period of time. And so I think it's hard to say. Like I think if Bitcoin's CAGR remains like 20 to 40% over any like decent amount of time over the coming 2, 3, 4, 5, 10 years, it's hard to see that how we would have another 80% drawdown in my opinion. If Bitcoin has a few very crazy years because digital credit really catches on and the market, is starting to understand that Bitcoin might become this multi-hundred trillion dollar asset, and Bitcoin just gets bid to like unimaginable levels in a very rapid amount of time, well, then it's not completely unreasonable for maybe it to correct back down, like, a little bit from from what it might do in a short period of time. So I think it's very hard to tell. I think any sort of parabolic move might lead to a pretty significant bear market, but I would definitely argue like we're nowhere near close to that. And I think kind of what we've seen with the recent 50% drawdown, it's actually like not as bad as it historically has been. Like we haven't seen an 80% drawdown in quite some time. And perhaps that will persist if we do see some pretty consistent, steady growth.
I was talking with Joe Consorti this week, and he told me, that we haven't seen anything with regards to Wall Street coming into Bitcoin, which is really just the dipping the toe into the water phase. There's some institutional funds coming in. You've got brokers like Charles Schwab who are allowing some limited spot Bitcoin trading. You can't really transfer in and out yet, but that's coming. We saw Morgan Stanley launch an ETF recently with kind of a race to zero on the pricing of that. So the next two halving cycles are when Consorti said, 2028, 2032, Wall Street's really going to be flooding in. What is your mental model for what that could look like? And is it going to make the Bitcoin Treasury summer of 2024 look small in comparison, Joe?
Yeah, I mean, I think the next bull market has really, really high potential for Bitcoin. I mean, just thinking back to like the success of Stretch and how I was kind of talking about like this is tapping into like a completely new capital pool that has never really, you know, wanted to access Bitcoin or get Bitcoin exposure. And we've seen that like, okay, this is the first time in like Strategy's history that they've actually had a pretty meaningful accelerating bid on Bitcoin, even while Bitcoin has fallen 50%. Like this is kind of like a bear market bid that has been put in on Bitcoin, partially due to the success of digital credit. And I think like Wall Street coming in, they're probably going to have like similar conclusions as to what I mentioned like before, where it's like Wall Street, and public companies and institutions, like they move very slow, obviously, and they have a lot of like rules around like risk and what they should actually be doing. And it's hard to, be managing billions of dollars and then watch your portfolio fall 50% and then have to explain that to like your board and everyone and your clients, like whose money or whoever's money you're investing. Like it's hard to explain that, right? I mean, it should be pretty obvious. Whereas digital credit, if it's stable and pays high income, that's pretty easy. Like every day you just check in and your board probably loves you, your investors probably love you, as long as everything keeps functioning as intended. And so like I think Wall Street will probably create like and acquire these new financial products that make it easier to get Bitcoin exposure and are a little bit more rational. And so yeah, I mean I think there's like Jesse Myers publishes like his total global wealth chart. Like there's 1+ quadrillion, 1,000 trillion worth of wealth out there in the world being managed by individuals, corporations, companies, endowments, sovereign nations, so on and so forth. Like, and there's not that much Bitcoin out there, and there's definitely not that much digital credit out there as of today. And so, if just a small portion of that like starts to realize that, okay, hold Bitcoin, you can get pretty good long-term risk-adjusted returns. Holding digital credit, historically, you've been able to get pretty good short-term risk-adjusted returns. Like, I mean, the waterfall of capital flowing into Bitcoin could open in a really big way. And yeah, I mean, I definitely think like the bull markets that we've seen in Bitcoin have been great. But there's probably a lot more fireworks left. And, arguably in the grand scheme of things, this thing could be just getting started.
Yeah, I like to describe last year as kind of like a Cambrian explosion of, Bitcoin treasury companies. And do you think that's possible again? Is just to see more companies coming public, or is it going to look a lot differently, Joe? Like what would it take? What would it take? For more like maybe for a Mag 7 company or a mega cap to adopt a Bitcoin treasury maybe partial strategy for their balance sheet. Is it going to take a board thinking they need some diversification? Because it doesn't have to be an all or nothing strategy. Although, certainly Strive, you guys are certainly all in on Bitcoin. Like that is your core business, right? Is delivering that digital credit. So, yeah, how do the next tranche of investors kind of at the institutional level realize that Bitcoin stores their value better than an alternative approach?
Yeah. So like at Similar Scientific, obviously I worked closely with Eric Simler, who's, a legend in the investing world, early investor, Netflix, and many other companies that you've heard of. He, and I completely agree with this. He has always said that it's going to be the zombie companies that adopt Bitcoin, right? It's not going to be Nvidia that's, whose revenue is growing at, I don't know, 30% per year. Its margins are growing or maintaining the same. Like it's one of the most successful companies in the world. A lot of the Mag 7 companies are like, if it's not broke, they're not going to fix it. Like, again, like I think large public companies, there's a lot of, they move slower for good reasons. And those companies that move slower and work, like they're not going to make they're likely not going to make some very radical change really fast. And I would say like Bitcoin is still highly unconventional, in public markets. But it's going to be the zombie companies. It's going to be the ones that like haven't done anything for years, that their margins are good, maybe they're cash flowing positive, but their growth is just not there. They just like cannot do anything. Their stock price has gone sideways for like 5+ years or more. Like they just can't get anything going, but they have all this money that they're making from their core business, but they just don't know what to do with it. It's like they could buy back their stock, but like their company isn't growing. So like, why would you do that? They could keep holding cash, but cash is a melting ice cube. They could, give dividends back to their shareholders, but like, if you're managing a company, you want to grow the company. You want to actually be able to generate value for your shareholders. You don't want to kind of admit that, all right, I don't know what to do with this money anymore. You can have it back. And so like if you are in that position, to me it makes perfect sense to begin thinking about either putting digital credit on your balance sheet or Bitcoin on your balance sheet. Like that was the story with MicroStrategy in 2020. That was the story with Similar Scientific in 2020. Arguably, that was the story with probably every single Bitcoin treasury company that has existed. And so I think that that's going to continue to be the case. I think in the next bull market, we're probably going to see maybe the exact same thing that kind of happened. I would argue like probably pretty similar. I mean, it's like if you're a public company that owns 1,000 Bitcoin and you're a profitable public company and you're generating free cash flow, well, then there's a pretty like logical argument that your company would trade for more than 1,000 Bitcoin. And therefore, that's kind of an interesting proposition, because if you trade for more than 1,000 Bitcoin, you can slowly issue shares over time, acquire more Bitcoin, increase Bitcoin per share on behalf of your shareholders, and kind of run that playbook for as long as possible. And as cash flows come in from the core business, keep generating, keep buying Bitcoin with that as well. And then as long as Bitcoin, the market thinks that Bitcoin is undervalued relative to full adoption, which, my opinion, might be like hundreds of trillions of dollars, then if that's the case, then Bitcoin's future expected CAGR might continue to be greater than any reasonable cost of capital, whether that's issuing digital credit, whether that's convertible notes, or any other sort of capital that you can raise. There's probably going to be demand for an amplified Bitcoin position if the market continues to think that until, full Bitcoin adoption. And so, yeah, I think the same thing will probably play out. It'll probably look a little bit different, but, when Bitcoin is ripping, market probably will be wanting more Bitcoin exposure. They'll be wanting, and they'll be wanting that in a variety of different ways. And, entrepreneurs and people that run companies are going to come up with creative ways to meet the market demand, just like what happened last cycle. I think it's going to happen again.
Yeah, lots of interesting points there, Joe. And I love that Bitcoin treasuries have been focusing on Bitcoin per share as a metric, because I think that's like the perfect orange pills to see a Bitcoin treasury company, using Bitcoin as their unit of account. It like makes it's such a great teaching tool for like, hey, when Bitcoin's your unit of account, like everything else looks like a poor investment relative to it. And thinking about what you said about Eric Semler talking about zombie companies adopting Bitcoin. I disagreed with him when he first was saying that publicly, because I saw so many of those mega cap companies sitting with a lot of cash on their balance sheet. I was like, oh, come on, they're going to have to figure out that, at least they can allocate to Bitcoin a little. But it seems they did find something to allocate some of that cash towards it with the rise of AI. So, maybe they were a lot smarter than me. Certainly they are being able to build out a business in certain time frames can outperform Bitcoin. So, no criticism for those large companies that are really successful.
You reminded me of an interesting point that I wanted to quickly bring up. Pierre Richard made this point somewhat recently, where he's like, you think of Bitcoin as this like liquidity sink for excess capital. It's Bitcoin is the least uncertain asset. It's a form of money. It's kind of what you do when you don't see any good investment opportunities that you expect. You hold Bitcoin when you don't have really any great investment opportunities. You brought up AI. and the CapEx spend that so many companies have done, like that's been a pretty clear, whether it's right or wrong or a good investment. Like I don't know how it's going to play out exactly, but it's been pretty clear that the market, as of right now, wants to invest that capital and wants to spend that money. And so you could argue that, kind of going back to your previous question, like what's weighing on the price of Bitcoin? Well, how many times have we seen like where there's a very clear way to deploy capital into the market right now, i.e., building AI data centers, and it's billions of dollars, like many hundreds of billions of dollars that are being deployed to do this. In a way, that's competing with Bitcoin. Like if there wasn't that very clear, obvious investment opportunity, maybe it's a bubble, I don't know, investment opportunity, then maybe that excess capital would have all flooded into Bitcoin. So I think that's an interesting point that you brought up about AI that a lot of people probably don't think about.
Yeah, really great point there, Joe. Um, I just want to talk about like the broader economic landscape, I guess, in the U.S. and kind of globally. So, borrowing rates for the U.S. Treasury are still quite expensive, compared to recent historical numbers over the last, since the Great Financial Crisis. And we haven't really had a real recession other than, kind of like a short technical recession, maybe in 2022. We certainly have had inflation that seems a direct result of the spending and easy money that kind of accumulated during the COVID regime. Um, how do you reconcile the fact that the medicine that the U.S. government with their spending and the Fed by not sharply letting the market dictate interest rates as much, how do you reconcile the fact that it kind of seems to be working and the economy is still working? Obviously, there's gaps and issues there, but the Bitcoin thesis is working, and at the same time, the fiat um, environment keeps chugging along. How do you reconcile those?
Yeah, I mean, it's a great question. I tend to think that the fiat system will probably continue chugging along as it's done for quite some time. Um, I think Bitcoin will continue chugging along for quite some time. Like it's, they're doing, like the Fed has two mandates, right? They want stable prices, which actually means like 2 to 3% CPI inflation as like by design. That's one mandate. And then the other mandate is an unemployment mandate. Like if people are all of a sudden unemployed, then they want to fix that. They want people to be able to have jobs if they so choose to have a job. And like they've done pretty well with that. I mean, right? Like other than 2021, like okay, like there was a large consumer price wave of CPI inflation, but like that kind of went away. Like in a way, like it lasted for a while, but in a way, it kind of was transitory, so to speak. But there's obviously a lot of like very negative externalities around centrally planning the money that I think even like in the fiat like economist like world, people are starting to grasp. Like the K-shaped economy has become like a pretty prominent term where it's like, okay, the top 1% who own all of the assets are doing quite well, but the bottom like 90% are struggling. Like housing is unaffordable for, younger kids and, new college grads and even people that are in like their 30s and 40s. The average age of like a new time home buyer I saw is like, I don't know, like 40 something years old, 50 something years old, which is like not necessarily great if you want like, young people to have hope in a future, to be able to start a family, to, to think that like they're going to be like to chase the so-called American dream that, people were so excited about. Like, that's kind of like harder to grasp at this point, working like a normal job. It's just like the numbers don't really add up for the younger generation at this point. And I think that that's been kind of a side effect of easy monetary policy and kind of papering over any would-be losses that would have occurred from malinvestment and central bank like the Federal Reserve doing that and just excessive spending from the US government. I think it's probably going to continue to happen. And logically, if this could be framed, what has happened is like socialism for the rich, where it's like, okay, well, things may not necessarily go the right way in a certain, an economic situation like COVID, but if you print a bunch of money and you spend a bunch of money, the rich people that had all the assets, their assets go up, and like they don't have to worry about like actually generating a lot of serious value. Like the losses were kind of papered over so much that it turned into a bunch of gains. And so this rise of socialism for the rich shouldn't be too surprising when you start to see like a rise for like socialism for the bottom 90% who like haven't been able to benefit from the rise in asset prices because they don't have 10 million, $100 million worth of assets. They're just kind of normal people working a regular job. Like, the inevitable outcome seems to be that we're going to see like more and more government spending, probably the Fed trying to stick with their mandate. Maybe inflation gets hot again and runs aggressively. Maybe it doesn't, but I'm pretty confident like the monetary supplies and dollars is going to continue to grow. And I'm pretty confident that as time goes on, people are going to see that Bitcoin makes a lot of sense as a perfectly scarce form of money. And, the two systems could continue working for quite some time. It's hard to tell how this is going to play out, but that seems pretty reasonable to me.
Good point. And I love that these counter narratives that Bitcoiners and other hard money advocates, have talked about for years are kind of on the rise. That gives me hope that we can come to more resolutions that make sense for more people, and it doesn't have to end in a way that where, like you said, the bottom 90% gets wrecked or something like that. So Joe, we're coming up against our time, but I do want to touch on, the regulatory and political risk to Bitcoin. So right now, the regulatory environment has been the most friendly Bitcoin regime in history. What prevents for you the next administration, whether it's a Democrat administration or maybe it's a very different Republican administration, that's kind of built up key regulators at the CFTC, at the SEC, et cetera, who are taking a more, I would say, maybe laissez-faire approach to Bitcoin and digital assets more broadly, and they're at least not. It's not the Gary Gensler SEC that we've seen, where there was a lot of regulation by enforcement, where there were no clear rules on how to operate in the space. Does Congress need to get more done, or what do you think keeps the government from coming after Bitcoin in the near term?
Good question. I mean, I know the Bitcoin Policy Institute does like great things on this for Bitcoin, kind of educating congressional leaders on what needs to be done. I by no means an expert on this. I would agree, like having some sort of like legislation actually passed that's like hard to overturn would be great. Obviously, first step, like the Clarity Act, I believe, is like kind of like the main thing that would be great. For just codifying a lot of things that have happened with Trump executive orders, but being able to like make that a little bit more difficult to overturn. Should a new administration come in and try to change things. However, I think this is also like part of what I was talking about earlier, in the sense that I think it's actually really good for Bitcoins to be distributed among more and more people, whether that's ETFs, treasury companies, or whatever else, because then you get people all on the same team. Like everyone then becomes on the NGU team. They want the number to go up. And then once, a majority of the United States has a significant exposure to Bitcoin, well, it's going to be very unpopular for a new leader to come in and try to change things up that are bad for Bitcoin. And I think that that's one of the best, probably one of the best parts about, the distribution of all these coins to this many people, whether the people are really paying attention to it or not, like if they own it in index funds or whatnot, is like they still, benefit from it. And over time, they'll start to recognize like, oh, wow, this index fund owns a lot of strategy or owns a lot of Strive. Like it's actually worked out quite well for me. I think that'll be great for Bitcoin, and it'll be very unpopular to not do that. And like we've seen, I think, there's arguments as to like what sways elections and whatnot. People have argued that like Bitcoin has played a big role in various elections. And I tend to agree. I mean, like I think Bitcoin is growing so fast. There's a small subset of the population that has a large portion of their portfolio in Bitcoin or Bitcoin adjacent assets. And with that being the case, like they're kind of like a single issue voter. Like there's other things that matter, but like if someone comes out and says, I'm going to do this to Bitcoin and this is going to be very bad for Bitcoin, Like that's an immediate no from, I don't know, 1% of the US population at this point. If that number grows to 10%, and those 10% are also like a group of people that may not have voted all the time. They may be like libertarian minded. They may be, you know, in between the red and the blue or outside the red and the blue, however you want to put it. This is like a pretty like interesting component of the population that might actually be swinging elections and probably will only get bigger and more useful as time goes on. And politicians are obviously elected to represent the people. And if the people want, you know, Bitcoin to be successful and in America to be Bitcoin first, then I think the people are going to get what they want over time.
Great stuff, Joe. And I certainly, for one, for two, hope that adoption comes swiftly and rapidly for a multitude of reasons. Joe, this has been a great conversation. Thanks for the time sharing with me, sharing with our audience here at BitcoinTreasuries.net. Tell the people where they can follow along with your work and see more of your stuff.
Yeah, absolutely, Tyler. Thanks so much for having me on. Really enjoyed it. You can learn more about Strive at strive.com. Our Bitcoin Treasury dashboard is at treasury.strive.com. Obviously, you can find me on Twitter or YouTube. Just search Joe Burnett Bitcoin and give me a look. But thanks for having me on, Tyler. Enjoyed it.
Awesome, man. And one thing I have everybody say before they leave is stay orange.
Stay orange.
Awesome. Thank you so much, Joe. One of the clearest thinkers in the Bitcoin and Bitcoin Treasury space, VP of Bitcoin Strategy at Strive, Joe Burnett. Tyler here. Just a quick one from me, guys. This conversation really hit me. Joe Burnett is the man. He's one of the clearest thinkers in the space, and I'm grateful for his time. I'm building this channel into the home for serious Bitcoin Treasury coverage, and I want you in the conversation. If you guys have a guest you think belongs on the show, or if you've got a question you want to ask me, email me, hello@bitcointreasuries.net. And if you haven't subscribed yet, fix that now. Thursday, we're going to be back with another interview, and I've got Alexander coming back for the roundtable next week. I hope you guys enjoy the Bitcoin conference. We got lots to talk about, lots of big news there. We've got big things planned for MSTR's next earnings call coming right up, and let me know who else you want me to talk to. Stay orange, you guys.